Good morning. I'm Andy Myers at Weiss Research, and this is your morning market alert for Wednesday, August 3rd. Stocks on Wall Street are set to bounce back a bit after yesterday's steep sell-off. Concerns about slowing economic growth have led to 8 straight losing sessions for the Dow Industrials, their worst stretch since the credit crisis of 2008, and the S&P 500 is now in negative territory for the year. The passage yesterday of a bill to raise the debt ceiling and cut the federal deficit is failing to boost investor sentiment. Following the deal, Moody's Investor Service confirmed its AAA credit rating on the U.S. government debt, but the firm also placed a negative outlook on the rating, saying that there is a risk of a downgrade if the economic picture weakens further. We'll get more data on the state of the U.S. economy later this morning, when the Institute for Supply Management releases its report on the services sector. That follows Monday's ISM manufacturing survey, which showed the slowest monthly growth since 2009. Also this morning, investors are reacting to the latest news on the labor market. Payroll processing firm ADP said that private employers added a solid 114,000 new jobs in July. Economists often look to this report as an early indicator of what we'll see in the government's official employment report due out on Friday. Traders are hoping for a big improvement over June's anemic growth of just 18,000 jobs. All the uncertainty surrounding the economy and the debt ceiling debate on Washington has prompted investors to seek relative safety in the markets. That has allowed gold to hit one record after another, and today it's jumping again to $1,670 an ounce. Traders have also flooded into the Swiss franc as a safe haven in the currency markets, pushing it to an all-time high against the dollar and close to a record against the euro. Today, the Swiss National Bank stepped in to halt that rise, cutting its key lending rate to 0 and saying it will boost the supply of liquidity to the money market over the next few days. On the corporate front, the media industry will be in focus today following quarterly results from 3 big names. Time Warner reported a 13% increase in profit, topping Wall Street estimates. The company credited growth in advertising sales, particularly those related to its sports programming. Shares of Time Warner are little changed in the pre-market. But Comcast is set to open modestly higher after its second quarter profit rose 15% and revenue jumped 51%. And after yesterday's closing bell, CBS said its net income more than doubled on strong increases in licensing and advertising revenues. The results were much better than analysts expected, and CBS shares are gaining about 1.5%. Another big winner this morning is MasterCard. I'll tell you all about its earnings report after the opening bell.